Good morning, everyone. Governor Mahlouf, Minister Donoghue, Mr Hernandez de Cos. I'm delighted to welcome you all to this, the Central Bank's third annual Financial System Conference. My name is Denise Delaney, and I am Head of the Supervisory Risk and Horizontal Division at the Central Bank. Over the course of the day, we look forward to engaging with you, our audience and our speakers, on the trends and strategies that define a well-functioning financial system. This is an important day in the Central Bank of Ireland calendar. Throughout the year, we meet and engage with you and all of our stakeholders on issues that are shaping the financial system. Each year, this conference, our flagship event, represents the culmination of our engagements with our stakeholders. We are delighted to have so many of you here in the room today, as well as hundreds more who are registered to attend online. Throughout the day, we would like to hear from you. There will be many opportunities for you and everyone in the room and our virtual audience to take part in the discussion. Those of you joining us online can put forward your questions via the WebEx question and answer feature. For those of you in the room, simply put up your hand. The theme of today's conference, Delivering a Well-Functioning Financial System to Support a Changing Economy, reflects both the opportunities and challenges that are facing the financial system today. Throughout the sessions, we will explore a range of topics, from the future of financial services and payments to integrity in financial services and enhancing the outcomes of the Irish financial system. We have a distinguished lineup of speakers and panellists from Ireland and further afield who bring a wealth of experience. We are eager to hear their insights. I encourage you to take part, share your perspectives, and make the most of this opportunity to connect with others working towards a common goal. Thank you once again, and with a packed agenda, let us begin our conference. It gives me great pleasure to introduce Central Bank of Ireland Governor Gabriel Mahlouf.
Good morning, everybody. Fulcher, and welcome to our Financial System Conference. Today's theme is delivering a well-functioning financial system in a changing economy. We have an excellent group of speakers, but I'd like to welcome in particular Minister Pascal Donoghue, President of the Eurogroup, and Pablo Hernandez de Cos, the former Governor of Banco de España, a former colleague at the ECB's Governing Council, and a future colleague as head of the Bank for International Settlements. In these opening remarks, I will briefly discuss the evolution of the global financial system and how we at the Central Bank are transforming to meet the changes we're seeing in Ireland's financial sector. And I'll also look further ahead at some of the changes we're expecting to see and how we're likely to respond. So allow me for a moment to reflect on some of the change that we've seen in the structure of the financial system through history, from early beginnings to today's digital world. The earliest form of trade was conducted through the barter of goods and services and slowly evolved into using commodity or representative money. In fact, virtual money did not arrive with the digital age, but was created around 5,000 years ago by the Sumerians, who developed a financial architecture based on accounting, a legal system, and a variable rate of interest. The Lydians brought us the concept of physical money through the creation of coins and laid the foundations for modern finance. Fast forward 1,000 years or so, in medieval times, witnessed the emergence of new financial instruments, such as bills of exchange and letters of credit, facilitating the long-distance trade and reducing the risks associated with transporting large sums of money across both land and sea. The Industrial Revolution marked a turning point as financial institutions emerged to support a thriving industrial sector. Banks, stock markets, and insurance companies played important roles in mobilizing capital, managing risk, and facilitating economic growth. But I won't go on. One thing that hasn't changed for some time is that modern nation states have also adopted fiat currency systems, and the central banks have become the guardians of stability in the value of money relative to goods and services, and the use of monetary policy tools to influence economic activity. As technology continues to develop, we're seeing our monetary and financial system also evolve, and we all need to be ready for change. Now, it's becoming something of a truism to say that the global economy is fragmenting, while the world, including countries such as ours, starts to undergo significant economic transitions in demography, in technology, in climate, while also experiencing a period of unprecedented innovation. And change isn't just coming. In some parts of the world, it is already here. In the face of a changing ecosystem, central banks, regulators, businesses, and consumers all have to adapt, transform, and evolve. For our part, we're changing how we work and how our frameworks reflect an increasingly digital world. While this transformation is across the whole of the central bank, I want to point to some of what we've done so far. We've been changing how we engage with innovation in financial services, enabling us to deepen our understanding of innovation, better inform our regulatory approach, better explain to innovative firms what being regulated entails, and better embed a regulatory culture in fledgling and fast-growing firms. Since last year's conference, where we announced a consultation on our approach to innovation engagement, we've successfully launched an Innovation Sandbox program. We've already received a substantial number of applications to our Combating Financial Crime Sandbox from across the innovation ecosystem, from early-stage startups, scaling firms, established financial services firms, and forward-thinking partnerships. The projects submitted are exploring new technologies and developing innovative methods to tackle financial crime, benefiting both the financial system and consumers. In the coming weeks, we'll be announcing the selected participants, and we look forward to sharing the insights and learnings that emerge from that work. In addition to our engagement with innovation, we'll continue to modernize our other frameworks. These include our Consumer Protection Code, while we work with our European partners on the Digital Euro and on negotiations regarding the new EU Financial Data Access Regulation, among other things. Our most comprehensive response to the changing financial system comes in the form of our new supervisory framework. It's a direct response to the rapidly changing and interconnected financial system which we supervise, recognizing that we need to change to make sure we can deliver our supervisory and regulatory mandate effectively, both today and in the future. Our new supervisory model is building on strong foundations. It will, of course, remain risk-based, but is evolving to deliver a more integrated approach, drawing on all elements of our mandate. That's consumer and investor protection, safety and soundness, financial stability, and integrity of the system. This enhanced approach is based on accumulated experience, on insight, on best practices, and is built for a faster-moving and more complex financial services sector. Importantly, it will also place consumer protection at the heart of day-to-day supervision. It will position us better as an organization to meet our objectives to ensure consumers of financial services are protected in a changing financial landscape. Firms will hear one consistent voice from the bank with more coordinated messaging and more streamlined demands across the full span of our regulatory and supervisory mandate. We will promote a more open and transparent supervisory approach. Strategic supervisory priorities will be clearly identified and communicated in a proportionate and timely manner. To enable and implement our new supervisory framework, we need the right operational approach and organizational structure. We're moving to an organizational structure where our regulatory and supervisory directorates will have teams responsible for integrated supervision across all our regulatory outcomes. And the changes come into effect in January, and you can read more about them on our website. A core theme of the central bank's strategy is being future-focused. And looking over the horizon, there are three areas in particular which are likely to be the next significant widespread technological development in the financial system. The payments landscape is changing very rapidly amid both technological and business model innovation. Significant frictions remain, especially in cross-border payments. We also need to strengthen our capabilities around tokenization and artificial intelligence. We recognize that public innovation in payment systems must keep pace with private innovation. Otherwise, challenges may arise in maintaining financial stability and monetary sovereignty in a digitally disruptive era. The development of a national payment strategy is one example of the importance of coordination to balance competing interests for the betterment of consumers and small businesses. In an increasingly digital world, it's also important that we ensure public money is available in digital form. The introduction of a digital euro is a logical next step in the evolution of our currency, while also responding to the shift in customer preferences for digital payments in order to future-proof our money. It would be a digital form of cash issued by the central bank and available to everyone in the euro area. The digital euro would go hand in hand with banknotes, providing an all-in-one digital payment option across the euro area, free for basic use. It'll blend the simplicity of cash with digital convenience while maintaining the highest levels of privacy. A further disruptive trend is the wider tokenization of financial assets. To be clear, this is not the same as speculative crypto assets, about which I continue to have concerns, not least for consumers. Rather, this is about using distributed ledger technology or similar technologies to tokenize real assets with real value. This has the vast potential to realize advancements in both real-time and dynamic transaction processing. This technology may have a lot of potential, and we've seen early engagement from industry who are exploring using it for different use cases, including cross-border payments, remittance, tokenization of assets, and units in a fund. Such technologies could provide greater access and choice to people across the world to financial services, and it could enhance cooperation between participants in the financial and payments ecosystem, reduce costs, and increase efficiency. It could also provide benefits to regulators in terms of real-time information access. As for artificial intelligence, its impact on the financial system could transform the risk landscape for firms by transforming existing challenges like interpretability, fairness, and ethical data use, and accentuating other ones such as cyber risk and governance. We've described this in more detail in some of the documents we published from earlier in 2024. All of us, industry and policymakers, have a role to play, and collaboration will be vital to realizing the potential of this technology while managing the risks. So let me conclude with just a brief look ahead to the future of the European economy and the financial sector, one of the themes of our conference. And I look forward to hearing different views throughout the day. There's been much discussion on this topic of late in the context of a challenging international environment and the great economic transitions I've already mentioned. I think it's a good thing we're having this debate, and note the ambitions set out in the Budapest Declaration by EU leaders just over a week ago. For my part, I would just make a few observations. Europe's strength has always been the combination of harnessing its internal market by balancing single rule books, level playing fields, and a belief in both the centre and the periphery, as well as the equal interest of states, big and small, alongside an international openness, outlook, and leadership. As we pursue our ambitions for European competitiveness, I hope we continue to put this combination at its heart. I also hope we recognise that long-term productivity and competitiveness are built through sustainable long-term policy. In financial regulation, that means not pursuing short-term growth through lower standards, but rather long-term stability, which is an absolute precondition for sustainable growth, by ensuring those that finance our economy are safe, sound, and resilient to the increasingly difficult external environment. Finally, on regulation, in particular on building bigger capital markets in Europe to help finance the economic transition, I would hope that we don't take the option of thinking we can simply regulate it into existence. We need to concentrate on delivering structural market reforms to pensions, to retail savings, to the supply of investable assets, and, at the end of the day, to the way our capital markets work with the real economy. But that is a whole other speech. I hope you enjoy the conference.
Thank you, Governor Mahlouf.